Hello everyone. Today we are covering direct expenses in the light of cost accounting standards, that is number 10. It is revised 2017 effective from 1st April 2010. Cost accounting standards on direct expenses. So this is the basic introduction in which direct expenses deals with the principles and methods of classifications, measurement and assignment of direct expenses for determination of the cost of product or service and the presentation and disclosure in the cost statement. This is all we are going to cover in this cost accounting standards. Objectives and scopes are same as we have already studied in earlier cost accounting standards. So some important definitions are there. What is cost object, what is abnormal cost, what is direct expenses, standard cost. So cost object is like in which we have to ascertain the cost of any activity, contract, cost center, customer, process, product, project, or any other object in which we have to cost ascertain. Abnormal cost is like it is an unusual, untypical, unexpected, irregular due to abnormal situation in the production cycle. Standard cost is a like predetermined cost. No? Before production of the product, we calculate the cost of the product. That is a standard cost, a predetermined cost of a product or service based on technical specification and efficient operating condition. Last but not the least, direct expenses. So this is the major point of this cost accounting standards. First we understand what is direct expense in basic talks only. It is a special expense which incurred in the manufacture of the product. Now what is special expense in general? It can be in the form of cannot be in the form of material or labor, but it is a special expense which is specifically identifiable with your product, and which are not identifiable, that is unidentifiable, those are called overheads. In more simple terms, like we manufacture pencil in which we need raw material and labor, but labor is one who will do processing in making the pencil. But there is a in one stage there is a point in which particular shape of pencil in which pencil should be molded. To give a particular shape to pencil, we need a machine, dies, special design, or to bring into shape. That expense is called a direct expense. Like further add on, if in a same company this machine or dies is used to give shape to another product also, like we can say pen, that is in the same company two products are manufacturing, that is one pencil and one pen, that is then one machine is using on multiple products, that is also called a direct expense. But direct expenses should be allocated accordingly to their proportion ratio or to their proportion output. So this says, definition says, expenses related to manufacture of a product or rendering of service which can be identified or linked with the cost object other than direct material cost and direct employee cost. So we can say this also like this: direct expenses is a third level expense in prime cost. What is prime cost? Direct material, direct labor, and direct expenses. It can also be said like if it is traceable, it should be added to the cost of product. If it is not traceable, then it should be treated as an overheads. So this is the direct expenses. And now what is principle of measurement? In the light of identification of direct expenses shall be based on traceability in an economical feasible manner. So this the first point says in this that if you purchase a product from outside and expenses incurred directly to the product, then how we get to know or how valuation should be done for that direct expenses. So this point says it should be determined at invoice or agreed price including duties and taxes and other expenditure directly attributed to thereto, net of trade discount, rebates, taxes and duties refundable or to be credited. So this says that if you purchase something and direct expenses incurred in relation to that, then how we get to know the value of direct? That is from invoice value or agreed price including duties and taxes, but net of duties and taxes, that is non-refundable, no ITC is available. If ITC is available, then we have to net off it, and other expenses directly attribute to this product. So this first point says. Second point says direct expenses other than those above. That means that is incurred expenses that is incurred from our pocket actually in relation to the product is called direct expenses. And third point says one-time expense incurred. There is one-time direct expenses incurred in relation to the product and benefit in relation to that product, or benefit we are going to receive, that is direct expenses will going to be received in multiple years. If you want to take that advantage or you want to enjoy the benefits of direct expenses incurred in today's date and output is coming in coming years, then it should be amortized. It should be amortized on the basis of estimate output or benefits to be derived from such direct expenses. In simple terms, it shall be distributed in such a way in each year on the basis of the output or benefits we will receive from that product. On the basis we will distribute our direct expenses. Further, it says if the item of direct expenses does not meet the test of materiality, it can be treated as part of overhead. If direct expenses occurred in relation to the direct to the product, but in that expenses doesn't have any importance to that product, doesn't seems any importance of that expense should be done in that when the manufacturing of that product, then it should be treated as overhead only. Finance cost is not a form part of a direct expenses, and where direct expenses are accounted as standard cost of variances due to normal reason, then it should be a part of direct expenses. If it is due to abnormal reason, then it should not be part of direct expenses. Any subsidy grant received or any shall be reduced from the cost to ascertain the cost of the product. Any abnormal portion of the direct expenses shall not form part of a penalties. Damage paid to should not be part of direct expenses because we cannot claim from our customer. Credit recoveries related to direct expense material shall be deducted to arrive to the net of direct expenses. Assignment of cost, very simple. That is easily traceable to the cost object, that should be assigned to the cost object. Presentation, direct expenses should be direct expenses occurred to the but it's always mentioned, it always presented into a separate head as per the nature of expenses, because direct expenses can be of different types of expenses, so we have to present into as per the nature of their direct expenses, like subcontract charges, royalty on production. Last not the least, disclosure. As usual, same as earlier we have studied in earlier cost accounting standards. Let's go through quickly on this. The direct expenses to the cost object or cost unit, we have to disclose quantities, rates. Also direct expenses, standard cost, if there is any variance is there, then we have to disclose it. The procurement of resources and expenses incurred in connection with resource generated, if there is related party transaction, if there is any foreign exchange, if there is any subsidy, grant, incentives or such has been reduced from reduced from the cost, then from direct expenses, then it should be disclosed. If there is any recoveries, any abnormal portion, penalties and damage, this should be disclosed in the body of the cost statement or as a footnote or as a separate schedule. Any change in the cost accounting principles or accounting standard due to any rules and regulation of government issued, or for the benefit of the company internally we have a change or update the cost accounting, then we must have to disclose in our cost statement in the footnote or as a separate schedule. So this is all cost accounting standard number 10 on direct expenses. We'll going to meet you soon with another video. Till then, bye.